Well, I do want to start with the economy after the weaker than expected economic growth numbers yesterday, plus also those higher than expected inflation numbers that came out last week. Interest rate cuts here are no longer being factored in by the money markets. In fact, they price in rate rises from June next year, as you can see here. In fact, by December next year, 64% chance rates will be higher. But the outlook is at odds with other nations, including the US and the UK, where rate cuts are still factored in. Brigette Leckie is Chief Strategist and Chief Economist at Koda Capital. She's been thinking about all of this and joins me now. Brigette, always good to chat to you. You've been thinking about the world and the way in which it's set up at the moment. Does it seem to you that Australia and its economy, the way its outcomes are right now, might be at odds with the way other parts of the world are basically seeing their economies track?
Look, Ross, it could be a little bit ahead of the curve. The Reserve Bank here has stopped cutting interest rates. I think it's fair to say that another rate cut is priced in for the US this month. But I think in terms of the US is coming towards the end, I think, of its cutting. Markets have priced in another 3 going through to next year, but I think that's going to be a tough ask. So in terms of Australia, growth has been sort of lacklustre, sort of hovering just below trend. Inflation is proving to be sticky. If you look at the US growth, I suppose at the moment we're in this sort of period where we haven't got clarity just because of the shutdown, but I think US growth is hanging in just, but I think going through into next year, US growth will reaccelerate, and that is where I think the US interest rate cut expectations need to be wound back, and that's where I think potentially Australia and the US become a bit more aligned.
Okay, is it unusual for an economy such as Australia to be right now considering that there could be interest rate increases in the near future, given the fact that economic growth is still well below its long-term trend?
Look, Ross, that is true, but I'd say to you, where is trend growth from Australia? I mean, look at our stock market alone. This year, it's been one of the poorest performing markets. It's fair to say, and you're rightly identifying, inflation here is quite sticky. It's coming from the services side. But I think also, in terms of growth here, saying it's lacklustre, we need to look a little bit underneath the bonnet at the micro level. So if you take the construction sector, what we are seeing is a rotation of jobs from public sector, as those public sector jobs have been completed, going into private sector construction. So the point of that is that it's taking a bit of pressure off wage inflation, where would otherwise be, if we had stronger growth, we'd have much greater wage inflation, then we would be seeing interest rate rises sooner rather than later. I would say to you, markets, when they pivot, they expect either rate cuts or rate rises sooner rather than later. So I think the Reserve Bank is more likely to sit on its hands before it actually moves and raises interest rates again.
But that being said, many parts of our stock market rose in anticipation of those rate cuts. If they're not forthcoming, is it likely that Australia is going to be lacklustre in terms of our stock market performance as compared with other economies where rate cuts are still factored in?
Look, it is, Ross. In terms of, if you look at the earnings numbers for next year, Australia's about 6%. I think that's probably going to be difficult. Whereas by contrast, the US rate expectations are closer to sort of 13 or so percent. But remember, our market, you've got the dividend yield on top as well. So we're not 100% comparing like with that. But absolutely, I think it is going to be difficult to achieve that. I think the areas possibly where we have got some tailwinds comes through in the commodity sector. I think if US growth does reaccelerate next year, that will give a bit of uplift to global growth more generally, and that will feed through into the commodity side.
So that being said, Australia needs a lift in productivity right now. That's been the general consensus from all economists. But the question is, where does that lift in productivity come from?
100%, Ross. No one's got the easy answers to that. A lot of that is absolutely structural, and I think it's going to take a long time to really see that lifting. What I do think is, I think Australia can get out of the per capita GDP recession. I'd also note that whilst we've had interest rate cuts, and obviously whilst we've got floating markets and the rate cuts go through more or less instantaneously, I think we still have a bit of a lag. I think we've still got a bit of a tailwind from that coming through. And I mean, anecdotally, I'd say to you, Ross, I think the Black Friday sales have been okay. I'm not going to say they've been sensational. And I also think, like other parts of the world here in Australia, we do have a K-shaped economy. So the top end of income earners are doing phenomenally well and the lower end are not.
I tell you what, Brigette Leckie, Chief Economist, Chief Strategist at Koda Capital. Always good to have in the program, Brigette, and chat to you again soon.
My pleasure.